The Chinese economy has slipped into deflation, with consumer prices falling for the first time in more than 2 years in another sign of weakening demand. The Consumer Price Index or CPI fell by 0.3% in July from a year ago, according to China's National Bureau of Statistics. That's the first time the index has fallen since February 2021. The cost of food, transportation, and household goods all declined in July. In particular, pork price has went down by 26% and the vegetable prices are down by 1.5%. Now, reason of the deflation. One is the weak demand. Chinese consumers are facing a number of headwinds, including the rising unemployment, falling home prices, and a slowing economy. This is leading to a decline in spending, which is putting downward pressure on prices. The unemployment rate in China rose to 5.5% in July, the highest level since February 2020. This is putting pressure on household incomes and leading to a decline in spending. Home prices in China have been falling for the past year. This is making it more difficult for people to buy homes, which is also putting damper on spending. The Chinese economy grew by 0.4% in the second quarter of 2023, the slowest pace since the first quarter of the 2020. This is a sign that the economy is slowing down, which is also contributing to deflation. Second, the oversupply. China's economy is still facing overcapacity in a number of sectors, including steel, aluminium, and coal. This is leading to a decline in price in these sectors, which is also contributing to overall deflation. China's steel production capacity is about 1.4 billion tons per year, but demand is only about 1 billion ton per year. This has led to a surplus of steel, which is putting downward pressure on prices. China's aluminium production capacity is about 50 million tons per year, but demand is only about 30 million tons per year. This has led to a surplus of aluminium, which is also putting downward pressure on prices. China's coal production capacity is about 4 billion tons per year, but demand is only about 3 billion tons per year. This has led to a surplus of coal, which is also putting downward pressure on prices. Third, the currency depreciation. The Chinese yuan has depreciated against the US dollar by more than 5% in the past year. This makes Chinese goods more affordable for foreign buyers, which is putting downward pressure on prices in China. The depreciation of yuan is making it more expensive for Chinese companies to import raw materials and components. This is leading to a higher production cost, which are being passed on to consumers in the form of lower prices. The depreciation of yuan is also making it more attractive for foreign investors to invest in China. This is leading to an increase in demand for Chinese goods and services, which is putting upward pressure on prices. However, the overall impact of the depreciation of yuan is to put downward pressure on prices in China. Now, impact of depreciation in China. One is the decreased investment. Deflation can lead to decreased investment as business become more hesitant to invest in new projects when prices are falling. This can lead to slow down economic growth. Second, the increased unemployment. Deflation can lead to increased unemployment as business cut cost in order to maintain profit. This can lead to social unrest. Third, the decreased asset price. Deflation can lead to decreased asset prices as investors become more risk averse. This can hurt the wealth of households and businesses. Fifth, the increased government debt. The government may need to spend more money to stimulate the economy, which could lead to increased government debt. And sixth, the weaker global economy. China is a major trading partner for many countries. The slowdown in the Chinese economy is leading to a slowdown in global trade. This is having a negative impact on the economic growth in many countries.